However, Asian markets are quite mixed right now.
Take above 53,357, which is the sort of last high, will confirm a further up move. Market starting a little bit flat right now, 10-point change lower.
Structurally, the small cap space is the most interesting space in the market.
The APM gas allocation has come down substantially over the last 1 year's time.
That's the listing, by the way, for Emcure.
Let's open up with a gain of around 30% odd.
The benchmark indices are down nearly 1%. The Nifty is hovering around 24,200.
They want to bring down the prices so that more people can buy it in the market.
Overall budget allocation for the Ministry of Road, Transport and Highways is likely to be around ₹3 lakh crore.
Major life insurance companies have taken a certain amount of price hike when it comes to the term insurance business.
It's a big cut that we're seeing across the indices, and this is after the levels that we saw yesterday.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Okay, today we have red on the screen, and it's a bit of profit taking across the board. That was the day so far. It's been that kind of a day throughout, even as we enter the last 60 minutes of trade here on Closing Bell. We are coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant, with me my colleagues Reema and Nigel. Guys, hi, good afternoon.
Hi, afternoon. But you know that fall took place only in the first 1 hour. After that, markets have been consolidating around that 24,250 thereabout. In fact, it's picked up from the day's low, particularly the mid-cap index. The mid-cap index at the session low was down 1,300 points, and now it's down 400 points. So I'm just saying the first hour was bad, but after that, it's not gotten incrementally worse. If anything, it's actually gotten a little better.
Well, in fact, just take a look at a few of the stocks reacting to pieces of news. The paint stocks are now at the high point of the day. Asian Paints, Berger Paints, both of them are doing very, very well. And, you know, for the final 60 minutes, we'll have to keep an eye out on the Nifty Bank. It's currently down close to 400 points. It's come off the low point of the day. Does it have some fight left for the final 60 minutes? That could be the big swing factor for today's session.
Absolutely. Asian Paints is up 3.5%.
Yes.
That's a meaningful move which is coming through. It's a sharp spike. We'll have Mangalam joining us on that exclusive story in a bit from now. But that's coming up. Now, just a few points for the market itself. You've got the Nifty, which is now essentially below the 40-hourly average. I mean, these are very near-term sort of numbers that we put out in the morning. That level stood at 24,268. You know, we are at 24,281. I mean, yeah, as it was coming in, we were under it. We are now slightly above it, 10-15 points here or there. And of course, I mean, the Nifty also is below, unless things change dramatically, the lows made in the last few days. So that's not just true for the Nifty, but you look at the Nifty Bank, you look at the mid-cap index, the small-cap index, we are kind of below those levels right now. Broader markets are under pressure, but we are better off. I mean, I think the small-cap index is up a full 1% from the day's low, and so is the mid-cap index, but that's the cut. And I think it's getting better as we are getting into the last 60 minutes now. Sectorally, I looked at, I mean, autos, of course, I think there's an outsized impact there from Mahindra. Metals are a bit of a weak point, and then you've got PSU banks as a sector, which is seeing some selling pressure as well. Prima.
So many individual stories, right? M&M is the top loser. It's the biggest single session fall in over 4 years for M&M. That's down close to about 4%. You've got life insurance companies on the way up on the increase in the term insurance rates. So SBI Life, HDFC Life are on the gaining side. We spoke about paints and how paints are driving gains. And particularly on paints, there was so much fear that with the coming in of Birla Opus, maybe pricing would remain under pressure. But the fact that paint companies have gone ahead, and the one which is the most premium pricing has gone ahead and raised prices, has instilled confidence in the minds of people. A couple of pharma names like Divi's Laboratory also seeing buying. In the FMCG pack, the Nifty FMCG index is up 0.5%, and that's the only sector in terms of a sectoral index which is holding up in the green. So you've got gains coming through in Britannia. That's hit a new lifetime high. HUL is seeing buying. Tata Consumer too inching up now.
Well, that's right, Rima. And, and some of those winners, they are seeing a good amount of buying from the low point of the day. Pull up Amara Raja. The stock was in the red. Now it's moved into the green. It was down more than 2%. So that's why just highlighting this counter as well. You should pull up Amara Raja up for you on the screen. But I think we have Mitesh who's back with us. Mitesh, what do you make of today's trading action, first of all? At one point of time, we were down 250 points. We're still down 150 points. Would you look to buy into this dip and also fill us in with your trading picks?
Good afternoon. We still haven't bought. The reason is that, we had this big hourly candle in the morning of the session today, which is what we was highlighting, that the fall happened in the first half. And then we moved sideways. But what has happened is that the indicators have turned south, at least on the hourly and the 2-hourly charts, which means that we are kind of an unsure territory. The daily charts are still good, which means that this will not be a big decline, but the pullback might not be over. So, we'll wait it out. The level to watch on the downside is 24,200. If we get an hourly close below that, then maybe, we'll see about another 150, 200 points kind of a pain, and then it should be okay. But for the time being, not sure. So we're trading with stock-specific biases. In fact, you were highlighting paint stocks. Berger Paints has given some kind of a short-term reversal. So that's on the buy list. Keep stop at about levels of 520 here. Look for a target of 550, 555 to begin with. Maybe eventually we might see higher levels, but that's the first minimum target which I'm expecting the stock to hit. And persistent after a good rally is now showing signs of a pullback. So sell here with a stop at about 4,610. Look for targets of 43.75.
Okay, we'll talk more about M&M in greater detail. Parikshit will also join in. But Prakash Diwan is now with us. Prakash, wanted to get your thoughts in 7% fall for M&M. Is it warranted? What's the street's big fear, given the news flow that we've had?
Good afternoon, Rima. So I think it's primarily, the interpretation of the markets to read this as a little bit of a panic button that the company is pressing. Hybrids is something which is not the mainstay of its portfolio for sure. And, some of these high price SUVs, which they might end up getting stuck with, will start seeing a significant differential between what hybrids offer. Of course, hybrids also are quite expensive in India. But between those and the XUV series, especially the higher end 700 and all, the differential becomes too yawning. So, that's what probably is coming in the way. Of course, it's coinciding with their annual review and things like that. So possibly that's the explanation. But, let me also tell you, the stock was trading at a multiple which was significantly higher than its historical averages. I mean, we are penciling in a lot of growth into the price, and the stock did kind of, warrant some sort of a trigger to temper down certain expectations on the growth. And this probably is the reason or excuse that the market has seen. So I wouldn't read too much into it. What's done is probably good enough, and it'll probably be smooth sailing. The key trigger for this stock, Rima, is going to be how the tractor sales start taking off post the numbers, from the monsoon impact and all of that. So if that happens, you'll probably have one more engine on which it starts firing. So we'll wait for that. But otherwise, I think this 6, 7, 8% of a cut is good enough. I don't think there needs to be much more in terms of a correction.
Okay, stay on. Let's get to the big insurance story. And this is, what we've learned from sources, that major life insurers have taken a price hike in their term insurance portfolio. Yash has picked up these details. He joins in. Yash.
Well, that's correct, Rima. So big life insurance companies and most of the listed players here, we understand from sources, have taken a price increase when it comes to the term insurance portfolio. Now, if I have to point out the names, HDFC Life Insurance, Max Life Insurance, Bajaj Life Insurance, Tata AIA Life Insurance, all of these players have taken an increase when it comes to the term insurance portfolio. We also given to understand that ICICI Prudential Life Insurance is next in line, which is expected to take similar kind of price increase again on their term insurance portfolio, and in all likelihood more life insurance players will also join this particular queue when it comes to taking this price increase. Now, if I have to speak about specific companies, HDFC Life Insurance, they've taken a price increase of about 10%, but this is only for age groups of 60 years and above. Term insurance forms about 5% of the total individual annualized premium equivalent, or APE, for HDFC Life Insurance. insurance, but the portion for which they've taken this price increase of about 10%, that is age group of 60 and above, would be much smaller. For Max Life Insurance, they've taken a price increase of about 1 to 6%, across age groups when it comes to the term life insurance portfolio. For Max Life, term insurance forms about 9% of their individual annualized premium equivalent. Bajaj Allianz has taken a price hike of between 1 to 6% again, and that forms about 6%. The term insurance portfolio forms about 6% of the total individual APE. Tata AIA Life Insurance also taking a price hike of about 3 to 10% when it comes to the term insurance portfolio. ICICI Prudential Life Insurance, we're given to understand, is expected to take a similar kind of price increase of about 3 to 5% on the term life insurance portfolio. There are 4 key reasons why this has been taken. One is inflation adjustment. Second one is increase in tier 2 and tier 3 insurance, term insurance coverage, and hence the risk profiling becomes a little riskier, hence the price increase comes on the entire portfolio. Third one is underlying cohort changes, and fourth one is the reinsurance premium, which have remained stiff and hasn't gone down. But in hindsight, what this price increase also helps these life insurance companies is to partially offset the increase in cost which will come from that higher surrender value which happened last month.
Yash, thank you very much for that. That is essentially news on insurance. I just want to make a quick mention, and we'll put this up at the bottom of the screen as well. Prakash, we were talking about this auto policy, right? And you were talking about the UP bit as well, what they've done for hybrid cars, essentially a registration fee waiver. This is a bit of an alert, a clarification, whatever you want to say, but this policy is expected. This waiver is only for 1 year, which means that this benefit in UP is going to end in 2025. In the second half of 2025, I think September, October. So for now, it is only for 1 year, this waiver. So, stocks went up sharply. Maruti went up sharply. And yesterday, it was almost a 7% gain. I think it was up in the morning as well. If this is only for 1 year, was that move, the question really is, was that move really a bit overdone? More than anything else. So, we'll have that up and we'll sort of discuss this in a bit from now. But another sector, and I'll come to insurance as well in a bit, but another sector where there are price increases coming is the paint sector. Now, sources tell CNBC-TV18 that the industry leader, Asian Paints, has increased prices. Mangalam is here. Mangalam, stocks up 3.5%. It's a meaningful move. What are you picking up?
It is a meaningful move. The important part about this price hike, Prashant, both Asian Paints and soon after we got a confirmation from Berger Paints as well, that they've gone ahead and increased prices by anywhere between 0.7 to 1% across their portfolio with effect from July 22nd. It's not the quantum which is important, as important it is the direction, because it's the first time paint companies have gone ahead and taken price hikes in the last 12 to 15 months. Remember in the fourth quarter, there was a cut of around 4% to spur demand, and also because raw material prices had seen a big cut as well. In the first quarter, there was no price cut, and as a result of which there's now room for some bit of price improvement, and ahead of festive season will be important to see whether there is still more room for price increase or not. So is this first of the many is what the street is penciling in. Why is it a positive move? Because one, there hasn't been a very significant change in, the input costs. TO2 and VAM are actually lower year on year. If you look at crude oil and HDPE, they are higher. Crude is up by around 11%, HDPE up around 1.5%, but nothing really to, topple the apple cart, so to say. And the first quarter for the paint industry has been weak because of labor-related disruption on account of election, but everyone is penciling in demand revival from the second quarter. And ahead of demand revival, if the prices are increased, that's a positive. And there is still strong demand coming in from the projects business. We've been speaking to all the real estate companies, the number of projects that are launched. That really works well for the paint industry. The key questions to now track from here on for the paint stocks are, one, will others follow suit? We have the answer for Berger. Chances are that, Kansai and others will go ahead and increase the paint's prices as well. Will the value/volume gap narrow? Because a lot of people were down trading. So is that going to, narrow going forward? Secondly, is demand strong enough to absorb the hikes? And most importantly, the last few months in the paint industry were disrupted because of competition. Is there now stability? Are the existing players now able to understand the scope of competition that will come in from Grasim, and as a result of which they've gone ahead and taken price hikes, is something that is being taken note of by the street. Add to all of this, the stocks had done not much. Asian Paints, in fact, from its highs are down around 18% this year itself, despite the up move that we're seeing today, is down about 10%. So all of this, a step in the right direction, has got the stocks very excited.
Okay, stocks very, very excited. Mangalam, thank you very much for that. Now, it's an unfair question, Prakash, but paints or insurance, both seeing price increases. But if you had to pick stocks to make you money, which would it be?
Okay, so interestingly, the insurance hike is an anticipation, and when it actually happens, you'll probably not see too much of follow through in that sense. So this is just a build up to that. The paint industry is, of course, at a very interesting juncture. The composition has changed, and it's a game of chess that is being played between Asian Paints and Birla Opus. Now, Birla Opus has already launched its products, just kind of got the distribution pipeline filled with its SKUs. It's not in a position to hike prices immediately. So Asian Paints has waited for its understanding, digested that information, and now gone out and hike prices, right? So it's a very smart move. And what they'll do is they'll try to position themselves in the niche that it's not a niche, actually. It's a very broad segment, in which the premium segment in which they are extremely well entrenched. And remember, if you use Asian Paints in your previous residential usage, you will probably tend to go with it if you're happy with it for the last 10, 12, 14 years, whatever. So it's not going to be something which people are going to change in a hurry if the price point is not significantly different. I think Asian Paints has to catch up in terms of, it has leadership. It will continue to have leadership. Birla Opus will just fill certain gaps in the premium segment, Prashant, but not be disruptive in that sense. So my sense is Asian Paints needs to be given its fair due in terms of the strength that it has. I would not be surprised if this trend continues. And as Mangalam rightly pointed out, they've not taken a hike in Q1. It's just the beginning of Q2, and they've done that, which is a tepid season. So whoever has to buy would not be bothered about it. It's only the festive season and onwards where really sales will pick up and make a big difference. So we'll wait for that, but smart move by Asian Paints for sure.
All right, Prakash, I wanted your view on Maruti. We're just talking about that bit of leeway that was given in the UP policy for EVs as well as hybrids. It's not going to be forever. In fact, we have a timeline. We just put that out. It's going to be only till the end of 2025. Now, reacting to that piece of news, the stock that was up, I think, 2% earlier, it's almost moved into the red. What's your view right now? I ask you this because yesterday the street went all guns blazing. It's a very small part of their portfolio, but they believed it was good enough relief. So the stock was up 7%. It was up another 2% today, and now it's in the red. Your view?
No, absolutely very true. And it's Prashant pointed this out, and probably everybody heard this. But let me also tell you that this policy by the UP government to support hybrids actually came up in 22 or 21. I'm not too sure, but it's getting implemented now with a 2-year lag. They didn't do much about it for 2 years, and hence it gets over in 25. No reason to believe there can't be an extension, but of course we'll only get to know how things move closer to that date. But the street is more excited, Nigel, about the potential of Maruti getting to benefit from some of the other states following suit. Remember, this is one state which has done that. If it takes off well in terms of car registrations, there's no other reason. And for UP as a government, the administration is very keen that they negotiate with some of these larger players to set up some sort of a production unit, which they don't have. There's no car manufacturing facility that's gone to UP. I mean, you have it in Haryana, you have it in Tamil Nadu, you have it in Gujarat, Maharashtra, but not UP. So it's something which they are missing out on, and probably I would believe that they'll use this as a negotiating tool to probably close on some of these MOUs, and that's precisely the reason why they want to attract these car players. But I would believe Maruti will continue to demonstrate salience as the percentage of hybrid grows. And taxation can go through a big rationalization move, maybe if not in the budget post that. But, this whole thing of differential taxes for EVs and IC engines and hybrids needs to kind of get rationalized somewhere. So if that happens, again, hybrid get a fillip. So lots in store, and that's why the market is more excited about that, and I believe rightfully so. As a matter of disclosure, I do have Maruti from the IPO days in my portfolio.
All right. Thank you very much, Prakash, for joining in. Let's get to another important story. Now, NSE, National Stock Exchange, about 2 days ago, has changed the eligibility criteria for the stocks which can be accepted as collateral. So there is a change in the criteria, and according to that, some stocks may not be accepted anymore. And there is also a change in the margin requirements for some of the large cap Nifty 50 stocks. So Harmis joins in with this, the latest on the NSE circular and what it means for investors and traders. Harmis.
You know, this circular, as you mentioned, came out a couple of days ago, and this is a periodic revision that the NSE takes place. Now, this is a revision for stocks that can be pledged as collateral to secure margin funding. And based on this, the NSE has now revised this list of stocks now which can no longer be used as collateral to secure this margin funding. Now, the note for the circular from the NSE clearing says that they will only be accepting those securities which have an impact cost of up to 0.1% for an order value of 1 lakh rupees. Now, impact cost is, of course, the cost of executing a transaction for a predetermined order value, and that is one of the criteria. And the other criteria is that the stock should be traded for at least 99% of the days over the last 6 months. Now, based on this, the list that they have revised, it's a long list of stocks, and this will not be effective immediately. It will be done in a phased-wise manner. So, from August 1st, the list of stocks now which are ineligible for after a period of time will only invite a 40% haircut from the 1st of August. Basically, it means that if you now pledge these shares which are no longer eligible from the 1st of August, you will only get 40% of that amount. And from the 1st of September, it will be 60%. From the 1st of October, it will be 80%. And from the 1st of November, it will be a complete 100%. So, which are the stocks? Some of the prominent names. It's a long list. So, we just filtered down some prominent names. There are Atul Auto is one of them. I filter that because it's, of course, the Vijay Kedia portfolio stock. Barbecue Nation is one of them. Bharat Dynamics being an outperformer in recent times. The stock has more than doubled in the last 12 months or so. Dish TV, DOMS Industries, Inox Wind, Keystone Realtors, and some of the other names like Spark, Suzlon, and Yes Bank, which have significant retail interest, also form part of this list. Back to you.
Okay, Harmis, thank you very much for explaining that. How much of this is an impact which is playing out and which will play out in the coming days and weeks? Ashish Rathi is with us. He's whole-time director at HDFC Securities. Ashish, good to have you with us here on the program. Thank you very much. You're one of the big brokers offering this facility. I mean, I think the margin traded facility, right? Could you tell us, not just for HDFC, but what is the size of this MTF book now? Which I think had grown very fast in the last couple of years.
So actually what I read overall in the articles, if you look at that MTF book size, I mean, that is around about across the market could be around 70,000 crores. But I can tell you one thing in terms of MTF, the risk mitigations are already in place. The norms of collateral acceptance, upfront margining are so stringent that in terms of systemic risk, there is no risk actually on the book. But yes, the book size is large and 73,500, almost 73,500 crores is what I heard the number on the street. Secondly, coming on to this,
you must have already seen the list of stocks, right, which are now being excluded.
Yes.
Could you say, for example, for HDFC Securities, what is the outstanding resting on these stocks for you?
So for HDFC Securities, I'll tell you, I mean, where we are coming from this circular, which is there. So what happens is particularly a customer, if he wants to take a position in say MTF, would pledge these stocks and take MTF exposure in any stock. So what is changing is the stocks which he can pledge, okay? And a broker in turn repledges it to the clearing corporation. Now that's the sum and substance. So earlier the number which the broker could take was around about 1,729 approximate number. Now that reduces and the number comes down to 719 almost. Okay. So the number of stocks that actually reduces is 1,000 approximately. Okay. So how does it impact all the brokers? But clearing corporations have done a very good thing. So they have staggered it. So immediately the impact may not be there. The impact would stagger over a period of from August to November. So from August, what you said, a 40%, 60%, 80%, 100%. So what happens typically, a broker would repledge it to the clearing corporation and then give limits to the customer. Now
Now, what will happen is once this stock list reduces, I mean, say particularly from November 1, the broker actually now will have only 719 securities to play with. Okay. The broker can obviously give more securities which can be pledged, but however, then it will require his own working capital to be deployed. So the brokers can give customers additional securities as margins. However, their own capital will have to be deployed. So I think so with this move, the risk management will become stricter in terms of number of securities that you can take from the customers as margins. Secondly, what will happen is in case the brokers
Sorry, Ashish, 1 minute. In MTF, you deploy your own capital in any case, right? You're financing the customer for taking position. What do you mean by that? You said that you can go outside the list, but then you have to... Yeah, sorry, go on.
So there are two parts to MTF. One is the stocks which you accept as pledge. Now that list is changing. And one is in the scripts which you can give exposure. Okay. So in the scripts that you can give exposure, that is not changing. What confirmation as of now we have from the clearing corporation. However, in the month end, it will become clear what it is. Okay. However, whatever stocks you are accepting as pledge, that list is changing from the clearing corporation.
No, I understood that. My only question was when you said you can go outside the list and you have to then provide own funding.
Correct.
In any case, for these 700 stocks, these 1700 stocks, you were providing funding, right? I mean, if you were providing leverage on top of... Yeah.
Yes. So what I told you, Prashant, is two parts. One is what I accept as pledge from the customers. So what I accept as pledge from the customer, I could repledge it to the clearing corporation. Okay, that option was there. Now for the 1700 securities, now the list reduces to only 719.
I see. You can't repledge basically if you go outside.
Yes, if you go outside. So now that reduces to 719. So obviously the clearing corporation will give me exposure only against this 719 and not against the balance 1010 after November 1, 2020.
Yep.
Ashish, you said the entire exposure for margin traded funding, MTF is it called, is about 73,500 crore, right?
Yes. Approximately that's the number which we
Approximately. That's the latest number. So now that 1,000 securities are excluded. Earlier 1,700 were eligible as collateral. Now 719 are going to be eligible. So nearly 1,000 securities are excluded. How much does that 1,000 securities constitute as a percentage of that overall book of 73,500 crore?
So once again to clarify, see the exposure which is taken on MTF stocks, that list doesn't change. Okay. The underlying collateral, okay, which the customers give as pledge, that will entail a change. That will again depend on the broker also. If he can fund, he can still continue to accept those securities. So we will have to see how it plays out in the market going forward from August 1, September 1, October 1 and November 1. So then only we'll be able to make out that.
Okay. Is there any way you can tell us how many stocks for HDFC Securities will be impacted on the 1st of November? Because of these exclusions?
So we have not yet internally decided how many we will decide. So once we have...
You will knock those out, right? If it's out of the NSE list, you will knock it out.
Yes. So mostly we'll knock it out. So current list is approximately 1072 that we accept as margins. Okay. So I think so the impact could be, if we continue with this model only, the impact could be around 300 securities getting knocked off.
300 securities getting knocked off. So... got it. From your list. So you had 1072 approved and 300 will approximately go out.
Yes.
All right. Today, because you know operationally, there is no impact immediately, right? Which is, it's in a graded manner.
No impact immediately, but we'll have
I'm asking because markets are down. There is no impact of this per se, as you're saying. I mean, there's no, you would know at a system-wide HDFC level.
No. At HDFC level, there's no impact because of this as of now.
Okay. All right. Fair enough. Thank you very much, Ashish. Appreciate you joining us and good speaking with you here on CNBC-TV18. And lots of measures coming, right? I mean, there is that SEBI expert panel looking on the F&O side, exchanges themselves doing their bit to try and kind of reduce sort of risks in the system and maintain orderly function as far as markets are concerned. We'll take a quick commercial break here. We'll come back. We'll talk about markets, of course, but will the RBI cut rates this year? Is the RBI worried about a bubble in stock markets? Is India poised for a GDP upgrade? Coming up tomorrow is a CNBC-TV18 mega exclusive, the definitive RBI governor interview only on India's most watched business news channel here on CNBC-TV18. Stay tuned.
Welcome back. The recovery continues in our markets. The Nifty is above 24,300. The day's low today was below 24,200. So now it's over a 100-point recovery that we've seen as the day has progressed. Jitendra Gohil, Chief Investment Strategy Officer, is now with us on the show. Jitendra, thank you very much for joining in. How do you feel about the markets now? It refuses to fall down. We haven't seen more than a 10% correction in the last 2 years. And now the FIs have also started participating in the markets over the last 2 months. So what's the view?
Hi, Rima. So it's not just India. If I look at even the US markets, that is also on a bull run. We have seen the P ratios of S&P 500 is currently around 21, 22 times. Even Japanese market is trading at 22 times P ratio. So large caps India trading at around 20 and a half. I think it is still not extremely overvalued. Obviously, the valuation is stretched compared to the historical averages. But if I look at the other markets globally, still our large cap indices are still at a reasonable valuations. So in our investment committee, we decided to stay neutral. We think that the portfolio should be fully deployed. We think that, the large caps are in a better position compared to mid caps. Mid caps are trading at almost 33 times forward PE ratios. So net, we think that we are in a structural bull market. There might be 3, 5, 10% correction due to any global events. But eventually, I feel that we are in a structural bull market where earnings are going to grow and compound at more than 15%, our view. And we still believe that the macro is so strong. In the second half, we might see more upgrades to India's GDP growth. And in fact, in the next 12 to 18 months, if we see rating upgrade for Indian, as a country, I think we might see elevated valuation for Indian equities. So we remain, we recommend to stay invested, mostly in large caps, and cut some of the exposures in mid cap where we see some kind of fraud building up.
All right. Hi, Jitendra. Good afternoon and good to see you in. Nigel on this side. So you want to put a percentage to that? 70% of your portfolio should be in large cap. Would that be a fair estimate?
So Nigel, we have recommended earlier 70 in large cap and 30 in mid caps. Recently, we have cut down that to 80-20, 80 in favor of large cap and 20 in mid cap. So right now we are somewhere 80 in large and 20 in mid caps.
What do you like then from the large cap names? I recall a few months ago, if I remember correctly, you were one of the first who were saying that maybe, this chemical cycle pain, it could be coming to an end and maybe things could gradually start looking up in the second half of this calendar year. Which are the themes you like? And if you want to put a quick comment on chemicals.
Sure. So Nigel, we think that first, in the second half, there are certain triggers that we are, monitoring. And we think that the trigger would be first is, robust GDP numbers. We think that the earnings also might see some uptick. So already at the beginning of the year, when we look at FY26 numbers, we were somewhere around 1,230 odd. And today, as we speak, we are reaching towards 1,280, and some analysts are also at 1,300. So we have seen earnings upgrades have started picking up. Second, we think that the budget is going to be extremely crucial. Government has around 1 lakh to 1,25,000 crores of additional spending headroom. And as we go forward, I think the tax collection may surprise on the upside. So the headroom is going to even improve in the second half. So net, we think that some of the economy facing stock, especially the rural focused NBFCs, those are the sectors that we like the most. Second, we think that consumption has been consumption was weak, and we think that after the budget there could be some traction there because the monsoon so far has started on a good note. And we feel that the rural consumption, which was languishing, probably might come up. So some of the fertilizer names, some of the chemical companies which are focused on rural side, those might start to see some buying interest, and we have been positioned, accordingly. The third thing, as you mentioned about chemical cycle, I think it's company by company. Still, the destocking cycle is not completely over. But looking at valuation, looking at the global destocking, which seems to be over, I feel there are pockets of opportunity in the chemical space where we think that some of the niche chemical companies having decent EBITDA margin, great market share, and also exposed to some export opportunities. I think there we might see more buying interest. So net, we think that sectors which haven't participated yet fully, especially chemical cycle or chemical stocks or some of the rural focused names, I think there we are positioned from second half perspective.
Got that, Jitendra. Hi, good afternoon. Life insurers, do you own any? We reported earlier that there is price increases, not very large, but on the term side, which is a very profitable product for most insurance companies, we're going to see price hikes. Anything you like here?
Yeah, Prashant. So overall financials, we have been neutral, but we had constructive stance on banks. Now we feel that, looking at some of the PSU banks and, some political compulsions, the government might announce some kind of freebies or, there is some concern about loan waivers and the behavior of the borrowers. So we feel that there could be some rotation happening within the financials towards mostly the insurance companies or towards the AMC companies, and those are into this value chain. So I feel, yes, we think that within financials, insurance companies, AMC companies, and the intermediaries are better positioned as a whole. And coming to life insurance, we think that the margins overall has stabilized, and we feel that in the next few quarters or so, we might see some benefit coming in as margin starts to see some expansion, as some of the companies have started to improve their product mix. So overall, I feel that, yes, slight marginal outperformance is possible from the life insurance companies. But we particularly like the PSU life insurance company due to the valuations, which are reasonably okay as of now.
Okay, like PSU life insurance company. Jitendra, what have you made of the latest turf war between hybrid versus SUVs? What's your own thought process over what's happening?
Rima, see, my view was that, look, EVs penetration will improve, but the kind of euphoria like India, I think we need some technology we can transition from fossil fuels towards the clean energy. And I think hybrid fits the bill. And I don't know why we haven't announced these kind of measures so far. But I definitely feel that for a country like India, this is going to be a good move. As I feel that, hypothetically also, if you see that all the vehicles are, let's say, operated through hybrid engine, then there's a possibility to reduce our oil bill by half, right? Because the mileage that you get from the hybrid vehicle. So I feel that this is a good move, and the companies that are exposed, that have technological advantage in that field are going to benefit. And this is, I think, this one state has announced, but if we see structural, or you can say, announcement from central government or from other states as well, I feel this is going to be definitely a kind of thing that the OEMs will have to take into account. But I'm not, completely negating that the EV export opportunities. I think there there are certain companies which have done phenomenally better. So I feel net, this move is positive, and there will be some shift happening from portfolio perspective because of this announcement.
No, absolutely. Jitendra, we'll leave it there for now. Thank you very much for joining us and running us through all that you are making of the market and what you like at this stage. Well, it's time for our special segment. It's D Street Chatter. Nimesh is going to get us an insight into what's happening in dealing rooms, and of course, we'll talk about stocks after that. Nimesh, afternoon.
Hi, afternoon, Prashant. So a good recovery from the intraday lows, but I guess it's a domestic liquidity which is cushioning all the sharp falls in the market. I guess the nervousness in the market was largely on the back of that NSE circular, which probably explains that maybe there could be some further clampdown in terms of F&O trading and a bit of retail activity in the market. So that seems to be a bit of a concern, and that can have a big impact on the mid and small cap. That's the overall feedback. In fact, I spoke to some large HNI investors, and everybody seems to be of the view that until the budget or even post-budget, there could be a bit of softness, and they've started raising the cash levels. So at least the smarter guy seems to be a bit cautious at these levels. From a flow perspective, again, it's a mixed day, but I understand there's going to be a MOC buy flow, both sides buy flows into non-Nifty stocks from a flow perspective. So that's something to track in the last 30 minutes of trade. I guess the churn within the sectors continues. So autos are under pressure today. On the other side, FMCG stocks have done well. Some select PSUs have done well. So a bit of churning seems to be on within the large cap names as well. I guess from a July series point of view, the earnings season which is going to kicks off, that's going to be a big important trigger, and of course budget will be a big important trigger. But I guess it's largely a bit of a caution view on the broader market stocks, largely on back of that concerns that there could be further clampdowns in terms of liquidity in the broader market.
Okay, all right, Nimesh, what about stock-specific action? What are you picking up?
So in terms of individual names, the first stock is MRF. That stock is in buzzing off late. Even yesterday, the stock was up and on good volumes. I understand the street is now anticipating that the company is likely to raise or hike prices very soon, and that could have a bit of an impact on the entire tire space. So the entire tire space could see a bit of interaction if MRF goes ahead and raise the tire prices. So that's the first name. The second stock is Bata India, a good sharp recovery from intraday lows. There have been buy flows for the last couple of days from larger FIs. Looks like some FI interest is back on that particular name, and so expect high delivery volumes for second day running in Bata India. The third name is Manappuram Finance. This has been the big outperformer in the last few days, especially on back of rising gold prices. But again, there is a lot of institutional interest. I understand a very large long-only fund is actively looking for bid blocks in Manappuram Finance. So there is an interest from larger FIs there. And the last name is Bajaj Healthcare. Well, the stock has been consolidating. I understand the company is likely to raise funds via QIP very soon. In fact, some marquee investors have already committed as anchors in the QIP. So it looks like the QIP is round the corner for Bajaj Healthcare.
Okay, all right. Thanks a lot for that, Nimesh. Well, as we went through the chat with Nimesh, the markets actually have recovered considerably from the low point of the day. Dr. Reddy's, well, that's moved up. Axis Bank is another stock that's moved up. It was more or less flattish at the start of this show. So those showing up only around 0.3%, but majority of it has come in the last few minutes or so. I think a couple of other names, Bharti Airtel as well, is now up 0.7%. So big move is what we're seeing out there. Time to slip in a short break. You come back, we'll see whether or not we got any more surprises on the Nifty Bank as it plays out weekly expiry. We'll also get you some technical calls. Our expert will be back with us. Welcome back. Well, we just highlighted that we've seen a good recovery of around 150 points from the low point of the day. Even the advanced decline ratio, at one point of time, there was only around 370 stocks actually that were advancing. Now that number has doubled to 730 stocks advancing. So they moved apart and now they're getting a little bit closer, Rod. But as promised, Mitesh Thakkar is back with us. Mitesh, what are the calls you have for us?
So estimating on PNB, that still remains weak. So we take a stop at 121.5 and look for a target of around 117. And apart from paints, I think Pidilite has also had a good move today, though it's off the day's high, but the structure is good. So BTST here with a stop at 31.45 for targets of 31.80.
Okay, all right. Thanks for that, Mitesh. Well, let's focus on a couple of new kids on the block. Pharmaceutical company Emcure Pharma, it listed at a 30% premium. Ekta joins us to fill us in with detailed analysis on that. Ekta?
Well, yes, the signs for Emcure Pharma were there from the start in terms of a good listing, simply because of the kind of subscription that it did see at around 67 odd times. Now, separately, they did also raise over 580 odd crores from 48 anchor investors. Now, out of the total money that they've raised, which is 800 crores from existing promoters and which is a fresh issue of 800 crores and OFS of around 1151 crores, 600 crores is going to go into debt reduction from the IPO proceeds. So the debt will come down to around 900 crores versus 1500 crores. 48% of sales from India, 52% from international markets, 13 manufacturing facilities. Margins in FY24 were a bit sluggish, 19% versus 20% year on year. And the company said that's because the last 18 to 24 months has been impacted due to 1,000 odd medical reps being, onboarded onto the company. If you look at it on a comparison basis also, the margins are a bit sluggish as compared to other peers on an FY24 basis. Aurobindo was at around 20.2%, which is a close comparison. Remember that a couple of these other companies also benefited from the likes of Revlimid generic, which also boosted margins. Separately, valuation-wise, it seems to be a little bit on the more expensive side if you just compare it on a trailing PE basis. The company says there is a second wave of capex of around 1,200 crores, which will get commissioned and aid margins. They have entered into a partnership agreement with Sanofi for cardiovascular distribution of their cardiovascular drugs in India, and that should probably aid and boost their domestic business. They're also quite bullish on the chronic segment of drugs, which is around 45% of sales.
Thank you, Ekta, for that. Let's get to the big story of the day, and that's the auto sector, where names like M&M, now even Maruti is actually in the red. Tata Motors too is down close to about 0.5%. Now, leading SUV makers, the Mahindra Group and Tata Motors, last night have cut down their prices. Parikshit joins in with the details. Parikshit.
Yes, we have seen two major OEMs in the SUV space, both Tata Motors and Mahindra, bringing down prices of their flagship SUVs. So if the prices of the Harrier and the Safari have come down by 50 to 60,000 rupees for a 1 month period, Tata Motors is also offering benefits of up to 1,40,000. The XUV 700, which is the flagship SUV of the Mahindra Group, the prices have been brought down by about 2 lakhs at least. Now, this is a big reduction. The companies are saying that this was a planned move. It was a part of their business strategy over the last 4 months. But this does beg a question on whether there is enough demand in the market, or this is the result of very high inventory, very high prices over the last 2 years, and somewhere the companies needing to feel that it is time to make a price correction immediately in order to reduce the inventory and also to create more demand in the market. There is also a lot of competition in the SUV space currently, and not just these two automakers. Across the board, Maruti Suzuki, Hyundai India, MG Motor, all of them are offering discounts with the beginning of July. The companies are also saying that the June sales were lower than expected in the retail front. There is some amount of inventory in the system. Inventory correction is also taking place. RC Bhargav, in fact, told us a short while back that they are doing some amount of inventory correction at Maruti Suzuki. Further discounts, quite possible, but it will all depend on how July sales are and how Q2 goes.
Okay, thank you very much for that. Here's what we'll do. We'll slip into a very short break. We'll come back with more on the markets on the other side. Stay tuned. Welcome back. Mayuresh Joshi, Head of Equity Research at William O'Neill, is with us on the show. Mayuresh, afternoon, and thank you very much for joining in. Paints, 3.5% up move on Asian Paints, and some of the others like Berger, Indigo are seeing much higher moves. What have you made of this latest move about the price hike, and do you think there is more to go?
Afternoon, Rima. Seems to be a possibility because the timing of this price hike is probably the worst quarter that paint companies are probably looking at. So after the price cut of almost 4% that we'd seen in Q4, some element in terms of a price increase looks to be of some respite for these companies. Obviously, I think the input costs have not moved higher. So to that extent, the expectations in terms of the second half, repainting demand coming back very, very strongly seems to be a base case scenario. Again, as a base case, when you're talking about the real estate cycle and a lot of refurbishments expected, both in new homes as well as existing homes, the expectations in terms of a 10 to 12% volume growth is expected. The new entrant, Birla Opus, probably is not in a position to probably do hikes right now at this juncture. And therefore, the market leader, Asian Paints, which has been followed by Berger, gives testimony that these companies are probably sensing that the second half might be relatively better. So yeah, I think these stocks can be kept on your radar. It's how the numbers probably will stack up in Q1 and Q2, which will lead to some element of re-rating as we head to the second.
Okay. Hi, Mayuresh. Good afternoon. Good to see you in. Mayuresh, what's your view on exchanges? You know, the ones that we have listed here, BSE, it's come off a bit from the recent top. But remember, it had a super 18 months and now that news flow with regard to curtailment of trading, etc., you know, seems to be damping sentiment, at least in the near term. So BSE with the other two listed companies as well, we have IEX, the energy exchange, which is down 4%, and MCX as well is down close to around 4%. View on any of these three?
So afternoon, Nigel, I think these stocks had run up a little bit too much for our comfort as well. So what we track at buckets within there in terms of both our EPS, RS ratings and base pivot levels as well. I think it was way high, way above the pivot level as well. Again, the kind of news flow that we're probably getting at this juncture in terms of F&O curves that might or may get introduced, volume activity will definitely take a hit if that probably does happen. And that will take an impact in terms of their transactional revenue. As far as the annuity part of the business is concerned, Nigel, for most of these exchanges, that should continue on a very strong footing. But I think to a large extent, I think the fear that is there, that if these norms do get implemented, if trading volumes do take a hit, the transactional numbers will start coming down, which will again hit their overall profitability, both from the top line, right, from EBITDA to the bottom line as well. So I think we'll wait for declines on these counters, not in a rush to get into any of these at this stage.
Again, I mean, insurers, because that's another story we reported in terms of price hikes on the term policy side. Yeah. Mayuresh, do you own anything?
So at a global level, we continue holding, Prashant, afternoon to you as well, SBI Life. Our take is with the term insurance hikes that have taken place, it's a marginal part in terms of their overall APE. So to that extent, how much does that create or have a bearing in terms of overall earnings growth is something to be seen. On the other hand, if you probably look at how insurance players, specifically life insurance players, are positioned in terms of the product mix, specifically after last year's budget changes, a lot of players, including HDFC Life, ICICI Pru, Max Life, had to make changes in terms of their portfolio. And therefore, I think a lot more in terms of front-end expenditure, in terms of overall commission charges, which is quite a lot for most of these players, anywhere between 18 to 22%, takes a substantial chunk in terms of the overall return on embedded values. SBI Life, to that extent, I think is a relatively better play in terms of product mix, in terms of the protection plans that it has to offer, in terms of the overall commission structure, which is still in mid-single digits, and the huge bank insurance network that it probably has. So pick and choose, I think SBI Life probably stacks right there on the top compared to the other things.
SBI Life has also been an outperformer. Year to date, SBI Life is up 20%, while HDFC Life is down 5%. SBI Life is very close to its all-time high levels, while HDFC Life is 22% away from its all-time high level of 775 and about 10-11% away from its 52-week high. Mayuresh, running out of time. Market's about to close. Thank you very much for joining in. Closing in the red, but the Nifty is closing not at the day's low. We're closing above the 24,300 mark, a cut of 100 points on the Nifty. The Sensex down 450 points, but the end is not as bad as what it was seeming to appear at about 10:30, when the Nifty was down in excess of about 200 points. The Midcap index was down 1,300 points. And finally, the Midcap index is ending with a cut of 150 points. But in the red for most of the indices. The Nifty Bank too, down close to about 0.6%, negative advanced decline ratio. And the stock of the day on the way down was M&M. But metals too were under pressure. The Nifty Metal Index down 1.8%. Hindalco, Tata Steel weak. IT names, losing ground with TCS, HCL Tech losing more than 1.5%.